Hi everyone, it's Christophe Choo from Coldwell Banker in Beverly Hills. And I'm here with Kevin Vandershans from Equity Title. Say hi, Kevin.
Good afternoon to everybody.
Kevin has been my title rep, you won't believe this, for 28 years. When I first started in real estate in 1989, Kevin taught me the classes about title insurance and what they were. And now 28 years later, we're still doing business and closing yet another deal today, which is pretty awesome. I like that, right? So I thought a lot of consumers, much to my surprise, don't really understand or know what a policy of title insurance is all about. So I thought I would talk with Kevin about that so we can help educate you in terms of what is a title insurance policy when you purchase a piece of property, whether it's land, a house, a condo, or commercial, kind of the different types of title policies and what they really do for you. So Kevin, first of all, in a simple term, what is a policy of title insurance?
A title insurance, and I've been with Equity Title for 30 years, and over the course of years, the title policy, the title industry has evolved to some degree, but it's always been based on the premise that a title insurance policy is to protect the consumer, first and foremost, because you could have a property that someone has owned for a couple of years, maybe 40 or 50 years, and you don't know what liens and encumbrances might be against the property. Most properties are free and clear, being that there's property taxes that are owed, it might be a loan, maybe a couple loans, but on some occasions you do have notice of actions, mechanics liens, IRS, federal tax liens. So those are the types of things that we have to report out and make sure that they're cleared so that when someone buys a property, they close escrow 30 days, 60 days later, that those items are free and clear from the property so that the consumer doesn't have Mr. Personality from the IRS knocking on the door and saying, hey, Christophe, we've got a $50,000 tax lien that you're on the hook for.
On your property that you didn't put.
That's right. That's worst case nightmare. So if that should happen and the title company has provided the title insurance policy, then it becomes a responsibility to defend any actions caused by that, whether it was a mistake in human error or something that wasn't reported properly. It becomes the burden of the title company to protect the consumer.
So let me, and by the way, guys, if you have any specific questions about title insurance, make sure to ask it because this is a live Q&A. But essentially, when you purchase a piece of property as a buyer in the state of California, you're getting what's called free and clear title. So you open up a preliminary title report, which is sent to your broker representing to you and the listing broker, which basically will show the buyer and the brokers what is on the property, I mean, what's recorded on the property, meaning typically we see easements from the city. The city may have an easement for water, an easement for utility poles or power lines or sewer systems. So it will let you know the city has an easement to go into 5 feet of your property to repair sewer lines or electrical lines, what have you. It also ensures, its title insurance, ensures that you will receive free and clear title of that property without any liens or encumbrances. So it will show what loans the seller may have on that property when you're in escrow. It will show if there's any tax liens against them personally, tax liens against the property because there's unpaid property taxes. So basically, it kind of starts off with a title policy, preliminary title report, which will show you what's on title. And then we as your broker and your representative will look at that. The title company will look at it and see if there's any particular issues or concerns, and then they will make sure that you get free and clear title so that if there's no issues, that when you get the transfer, you can have the title insurance, you have the property, and you don't have to worry about any of those issues coming up. And if an issue does come up down the road, that insurance will protect you against specific items that are covered in that policy, right? Is that a layman's way of saying it?
Yeah, that's exactly right. Couldn't have said it any better.
So what people also don't know, there's an owner's title policy and a lender's title policy. So, for example, in a typical escrow, the owner will pay a portion of the title policy to ensure that they are giving you, the buyer, free and clear title. And you as a buyer are not required to obtain any additional insurance unless you have a loan that you're getting to purchase the property, which is called a lender's policy of insurance. And typically, you as the buyer will pay for the lender's policy to ensure free and clear title for your lender because they don't want to loan you money on a property unless they have free title. And the owner's job is to pay for the portion that confirms that they're giving you free and clear title. Is that a pretty accurate way of describing it?
Exactly right. The reason that the lender needs a title insurance policy is if the lender is making a loan of, let's say, $500,000, they want to make sure that their first deed of trust is in first position, as opposed to being a junior lien to a federal taxing, a state taxing, so that if there's a foreclosure, they foreclose on their first, not subject or junior to one or two other liens or encumbrances. So that's why there's two policies.
Got it. And another thing about title that most people don't know, when you open an escrow, both the buyers or buyer or multiple buyers and the seller or sellers fill out what's called a statement of information form, where you fill out where you've lived the last 10 years, your social security numbers, your driver's license numbers, and the title companies will pull at the local county recorder's office. Is that right?
Yeah, we do. What will happen, and it's the biggest key that comes up, Christophe, when there's a failure in title, because my name is, it's Kevin Vandershams. It's a unique name.
Right.
If a title company runs what they call GI, General Index, anything recorded in LA County, they run Kevin Vandershams.
Right.
There's nothing there.
Right.
Hopefully so.
Right.
Okay. However, if you've got the name of Robert Smith, Tom Brown, Smith,
Common
Jones,
names.
Brown, Common, Kim, for example, all very common names, the title company can't just go onto the computer and pull up that name, because there's too many Robert Smiths out there.
Right.
So that's why we need to know where you've lived and worked for the last 10 years, driver's license, spouse, so on and so forth. And by the way, when you provide the driver's license, I always tell people only the last 4 digits.
Really?
Don't need to give us
That's
all 10.
interesting.
Give us the last 4, security reasons. Don't want that out there, even though we're all trusted. And by the way, it's all very confidential.
Yes.
Once we have it, we're done with it.
Yeah. And one of the things is, for example, if you, I think if it's LA County or California, but they do this title search because if you, as a buyer or you as a seller, happen to have judgments recorded against you for a court case, or I've seen in the past, owners may have judgments for spousal support that are recorded and maybe past due. Basically, those things have to be taken care of and cleaned up and handled before the title company will insure title policy. So sometimes an owner won't even know there's a tax lien recorded on their property that they may have paid off or may not have paid off, and they're not aware of it, so that will pop up, and the seller will have to take care of that tax lien, satisfy it in order to close escrow and to give you, the buyer, the free and clear title of that property. And same thing if you're a purchaser, and I think you have a tax lien or a judgment, that would have to be settled before you can get the title policy. Is that right?
Generally speaking, yes.
Yeah.
Generally speaking, yes.
So it's just a way to protect yourself against faults. Now, if you're buying something directly from an owner, for sale by owner, which is not recommended, and you don't have a loan, you're not required to have title insurance, right?
No, you don't. And most people don't realize that. However, you'd be foolish not to. Because, by the way, a title insurance policy is a one-time payment. One and only. And on average, it might be $2,500, $3,000. But you'd be making a big mistake. It's you and I have known each other.
It's like buying a car without car insurance.
Even worse.
It's a house. It's much more expensive.
Because you could have an automobile accident and it might cost X number of dollars. When you have an issue with title, you've got an issue, because you and I have known each other 28, 29 years.
And we've been through a couple of title bumps in the road.
Yeah, and while it is completely optional, it's certainly recommended. When it comes to the lender, that's not optional. That's a mandatory.
The lender will require it.
Conventional lender will always require it. But even again with friends, if you're a friend with someone, you don't have to. It's up to you depending on your comfort level. But I certainly wouldn't recommend transferring this out of property without title insurance.
I mean, I've never ever closed an escrow in 28 years and maybe close to 600 deals without a policy of title insurance. I always tell the clients you got to get one. So it's really an important protection for you and it runs for the life of your ownership of that property.
Absolutely. Until the conveyance to another party down the road.
And sometimes even like if you're buying a big piece of land, or if the property lines are not defined, you can even hire the title company to come out and do a full survey. It costs, depending on the size, probably a few $1,000s or even more. But they will literally come out. It takes some time. They bring a surveyor, and they literally will plot out and map out exactly the boundaries of the physical property. Because sometimes in the purchase of real estate, there are fence disputes, wall disputes. You're 2 feet over in my property. Someone's building a new house, and they build it over the property line. And sometimes, if you get the right title insurance policy, you can protect yourself, and that owner's got to move that house back. So you don't want people encroaching on your personal property rights, which is one of the many reasons to get the title policy.
Let me add to that if I can,
please.
because I have one currently that just took place yesterday.
Okay. The stories are always good.
Yeah.
Because they're real.
When we've got one right now where someone purchased a property,
Okay.
or an escrow, excuse me. The owner of the property is under 62 years.
Wow, 62-year ownership.
It's up
okay.
in the Hollywood Hills. It's about $1.7 million, $1.8 million property, whatever the case might have been, and everything was looking good.
Okay.
Until the buyer said, you know what, let me get a surveyor out here. It's up in the hills, because the agent, being smart, told them you should really get a survey because they might be doing some work to the property. They got a survey. We were privy to the survey yesterday, and there are some minor encroachments, fences and walls and hedges. Generally not a big deal, but in this case here, about 11.5 to 12 feet of the property is encroaching onto the property next door.
So this seller's property is encroaching means you're stepping onto someone else by 11 or 12 feet?
11.5, 12 feet.
The house itself?
The house itself.
Oh, shit. From 62 years ago?
Yes. And the house was built in the 1920s. And so now we have and this is probably an escrow that's going to fall out later today, undoubtedly, because they're going to have to do a CFC.
What's a CFC?
Lot line adjustment.
Oh, so lot line adjustment.
The talk was, let's do an easement. You can't do an easement for something like this. An easement is where I grant you permission to use a portion of my land.
Right.
You can do that for a fence, a wall, a hedge, a tennis court.
But not a house.
But not a house.
Yeah.
And this is a house. And,
wow. So feasibly, the owner would, like I talked about, would have to tear down the 11, 12 feet of the structure if the owner next door doesn't allow them to do
Could be. Now, in this particular case, you have a young family, couple kids. Wife is about 8 months pregnant. They're not happy. They're very disappointed. But can you imagine if the agent didn't recommend getting a survey and this closed escrow, and if the neighbor happened to find out about it? Not likely. Okay. Yeah. But if that neighbor next door sold the property to a builder or developer,
that's right.
They did a survey at that point, and then they said, hey, guess what? You're encroaching by 11.5 to 12 feet. Then you have a problem.
Major problem. I mean, how would you like to buy a house and find out after you close escrow and spent $1.7 million that your property you bought is 11 feet on your neighbor's property, and you're going to have some problems? That's major problems. So that's one of the reasons why in my business now of 28 years, I'm extremely loyal to people that are great. And Kevin is one of the best in the industry. And 28 years later, we still do all of our deals with Kevin and Equity Title. And every once in a while, maybe one out of 20 or 25 transactions, there's a little issue that will pop up on the preliminary title report. I'll call up Kevin and say, hey, Kevin, I just noticed this. Seems unusual or different. Is this something we need to be concerned about? So we discuss it. We talk to Werner Weissig, the president, and we kind of strategize, oh, it is a problem. It's not a problem. This is this direction to go to fix it, et cetera, et cetera. And so let's talk a little bit about this. Basically, two kinds of title policies today, right? Mm-hmm. Maybe just share briefly what those two policies are and the benefit of the better one, which is the one we always recommend.
There are two, very briefly, because I could talk about this for 45 minutes easily, but I won't.
Nobody has any questions so far. I can't believe it.
Because we're very efficient in what we do.
Good. I guess we're covering all the bases.
That's right. There's the AOTA HOP policy, Homeowners Protection Policy, which is the best policy that one can get. So not only
Alta HOP is what we call it.
HOP, like in a bunny hop, okay? But Homeowners Protection Policy. So it's the policy that you want to get, a policy of choice, undoubtedly, but it will protect you with everything that Christophe has spoken about. But in addition to that, it'll cover some post-policy issues like forgeries. Okay, if someone forges if you've got an evil twin brother
that pretends like he's a seller and signs a deed.
The owner, and he signs a deed
for
$50,000, and he's able to pull it off. Without this policy, you'd have to deal with it.
Interesting.
You'd have to get an attorney.
Never heard that one before.
With this policy, the title would be incumbent upon the title insurance company to defend that. Another good example, because there's 30 very small items, or 30 different items, is post-policy permit violations.
Post-policy permit violations, meaning?
If, the best example I could think, back up in the Hollywood Hills again, is that I had a situation years ago. Someone bought a property, sewer permit snapped. They had to get it reconnected. In order to do so, the plumbing company went down to building and safety to get a new building permit number. And the inspector, the guy down at the city, said, hey, guess what? There was never a sewer permit number issued on this property. And what that meant, which was really good news, because again, really good agent, said, I bet you might have a claim with the title company. Mm-hmm. So they went to the title company and said, you know what? There was never a sewer permit number issued, and it fell under a claim that was payable. Meaning that in this case here, the liable amount for title companies up to $25,000.
I see.
The sewer line cost, I think, was like $9,500.
Big expense.
They paid the first $2,500 of deductible.
Mm-hmm.
The title company paid the other $5,500, $6,000.
Got it.
So you know what? And the cost of this policy is none to the buyer. It's borne by the seller. But on average, it's about $300 approximately.
Okay.
And that's why it's a fantastic policy to have.
Got it.
This policy, however, is only good for homes and 2, 3, 4 units. It's not good for lots, not good for commercial industrial properties, but really residential or, like I said, 2, 3, and 4 unit properties.
So again, in my experience in life of almost 50 years, usually the most expensive is the best, and always hire the best, because when issues do come up, which they do come up in life, you have the protections. And that was one more thing I'd like to talk about. In the city of LA, we're primarily connected, every property is connected to the LA City Municipal Sewer System. So you have a pipe from your house with all the drainage that goes to the city connection. And one of the reports we get is a 9A report from escrow, where it tells you if the sewer is connected or not, and sometimes it's not. And the title company will send out someone to do a dye test, where they literally, you want to tell just a little bit about the dye test for sewer connections?
Yeah, what happens is the dye test was really popular once upon a time ago. It was $116.63, but more recently, the position that the city has taken is they'll require whomever is asking, whether it's prospective buyer, the owner, agent, to, if there's a question about, because there's no sewer permit ever been issued, they will have a certified plumber come out, and they'll do one of those camera tests. And then the inspector from the city will come out, and then they will confirm that there's a connection via the camera, a connection from A to B, being A being the house and B being the sewer line. And also to verify that the sewer line itself is in good working condition.
That's important.
It is, and because I've had a couple of cases, including one maybe about a month and a half ago, that it wasn't, and it cost, it was about $18,000.
Wow, that's expensive.
So it could be. So the cost of that these days is about $400 to do, but it's well worth it. Whenever an escrow, you want to make sure that you have a sewer permit number that's been issued, and of course it's in working in good condition.
And actually, I never asked you this question, although we've done a lot of dye tests and making sure there's permits. What would be the problem if you buy a house does not have a sewer permit issue? What's the downside of that?
Well, the downside, it's interesting you ask that, because if on the hot policy, like the one example I used with the young couple, no one knew. And it came up after the fact that there was no sewer permit.
So after they bought the property.
They bought the property, so there was a claim made to the title company. However, if one knew that there was no sewer permit, or if there was an issue with the building permit, but it was disclosed on the transfer disclosure statement, then all bets are off, because
it would not be insured.
It would not be insured for that.
Got it.
But in regards to your particular question, it may not be a problem, but it may come up when you go to sell the property yourself a year, 5, 10 years from now, because now a buyer down the line says, hey, I don't see a sewer permit number, and now they do the camera tests, and now they find out it costs several $1,000s. So you're on the hook for it, so to speak.
Got it. So, but the fact that it's because people can illegally tap into the sewer without a permit, is that what it has happened?
It's happened many times.
Really? So builder builds a house, they connect it to the sewer without a permit, just to save a few $100s in permit fees?
That's usually what it is. I just saw this in Beverly Hills 2-3 months ago. This goes back to a home that was built in the late 30s, early 40s. Owner owned 2 lots. They got a permit issued from one lot to the other, but they didn't, whether it was mistakenly or they wanted to save a few bucks.
Interesting.
Didn't get that second sewer permit, and all of a sudden it now comes up years later, which it did.
Got it.
And now you got to rectify it, but then you do the camera test. And usually it's rectified, but why put yourself in that position?
And I remember once, years ago, I don't remember the details, but I think one of the properties we sold, they had actually connected the sewer to the neighbor's sewer line. So that can happen too. So,
or one can think they're on a sewer permit, sewer line, and they're not. I had this up in the hills many years ago with someone we know. Her son was buying a property, and the owner had lived there many years. And guess what? No sewer line. And the city said, closest sewer line is about 300 feet away. It's a football field. They said it's impossible. And you've ever seen those guys at the beach looking for change? And that's what they did. They had a guy come out. And guess what? It was under a septic. It was a septic tank.
The owner didn't know there was a septic tank?
No.
For 60 years? Who cleaned it out?
They never had it cleaned out, and that's an
Holy
absolute
cow.
true story.
Wow.
So they had to get it cleaned out. It was again pricey, but it's hard to believe it was 58 years. This was I won't mention her name.
Okay, yeah, don't.
But it all worked out happily.
Good. So in closing, because we could sit here for hours talking about title, horror stories, and issues that come up, I think my bottom line is with anything is hire experts when you're buying a house. Hire an expert when you're selling your house that has the right team, such as Kevin, my title rep for 28 years, an agent that knows what they're talking about, a title rep that knows what they're talking about, that has a good relationship. So if and when those little troubles come up when you're selling your house and things come up that you weren't aware of, or you're a buyer and we discover something that's a potential problem, how can we clean it up and make sure that you're safe so that when you do buy it, you can enjoy your property happily and enjoy the rest of your time in that house as you want to enjoy it. So get the experts. Hopefully, if you're buying in LA or selling in LA, it's me. And if it's me, guess who'll be your title rep? Kevin Vandershans. Thanks for watching. And I think we'll do more of these because I find more and more people are asking lots of questions. And I just assume people know about title because I do this every single day. But we're closing a deal today. And the buyer didn't really understand how the title policy worked. They're from New York and what the benefits were and the protections. But there were some title issues that came up and we were able to solve it. But it came up because we had the right title policy, the right title company, and together through a few days of work and figuring it out, we brainstormed it, but we got it done, and the deal's, hopefully it's already closed, right?
Another one completed.
Another one completed. Thanks, Kevin. Thanks for being here. Thanks, guys, for watching. See you soon.
You.